Welcome to today's Explainer. We're jumping right into the latest financial results from HDFC Asset Management Company, or HDFC AMC. Now, if you follow the Indian financial markets, you already know they're an absolute powerhouse. But their Q1 FY27 numbers just dropped, and there is a lot more going on under the hood than those headline numbers might suggest. Today, we're going to break down this earnings report so we can understand exactly what is driving their massive growth.
So, here's the big question we're looking at today. A 34.45% jump in profit from one quarter to the next. For an established giant, that is huge. Understanding the underlying mechanics of this jump gives us real, tangible insight, not just into HDFC AMC, but into the current mechanics of the entire mutual fund landscape right now.
Here's our roadmap for today. We'll hit the Q1 FY27 headline numbers, decode that massive 93 lakh crore asset base, look at the sheer power of retail SIPs, uncover what's really behind this profit surge, and finish up by looking ahead.
All right, Part 1, Q1 FY27 headline numbers. Let's look at those initial shock and awe figures from the June quarter.
So HDFC AMC reported a consolidated net profit of roughly 837 crore rupees. Year on year, we're looking at a solid 12% increase from Q1 of the previous year. That alone is a very healthy metric. It shows consistent, steady earnings growth. But that year-on-year metric, it really only tells half the story.
Just look at this recent growth trajectory. The final quarter of the previous financial year, Q4, gave us a pretty moderate performance with profits sitting around 622 crore. But what we're seeing right here in Q1 FY27 is a really sharp recovery from that softer period. That's exactly what drove that massive 34.45% quarter-on-quarter spike.
Moving on to Part 2, decoding the 93 lakh crore in assets under management.
The company reported a quarterly average assets under management, or QAUM, of over 93.51 lakh crore rupees. Just let that number sink in for a second. This massive pool of capital gives them a formidable 11.2% market share of the entire mutual fund industry's quarterly average AUM. They are firmly entrenched at the top. But, as we know, it's not just about how much money they have, right? It's about where they put it.
And HDFC AMC positions itself incredibly aggressively. A massive 66% of those assets are allocated straight towards actively managed equity-oriented schemes. If we actually exclude index funds, their active equity AUM alone stands at over 57 lakh crore. It's a very deliberate strategy to attract those long-term wealth creators.
Now check out this stark contrast. The broader mutual fund industry average sits at a 57 to 43 split. HDFC's 66% allocation proves they're leaning way heavier into active equities than their peers. And why does this matter? Well, equity funds command higher management fees, which directly feeds that top-line revenue.
Part 3, the power of retail SIPs, driving growth.
So we gotta ask, who exactly is fueling this massive influx of capital? Well, it's the everyday investor. Individual investors account for an incredible 69% of HDFC AMC's total monthly average AUM. Compare that to the industry average of just 61%, and it tells you something very specific. HDFC AMC has built immense brand trust among regular retail participants, not to mention a seriously wide distribution reach.
And what's the preferred tool for these retail investors? The good old SIP. In June 2026 alone, HDFC AMC processed 17.2 million systematic transactions. Think about that. That brought in a staggering 4,810 crore rupees in a single month. For an asset management company, this is literally the holy grail. It guarantees disciplined, predictable, and recurring revenue, which kind of protects them from the wild swings of lump sum investments.
All right, Part 4, behind the profit surge. Let's really break down the financials here. Okay, check this out. While their core business revenue, the money they actually make from managing funds, grew a respectable 4.58% quarter on quarter, their total income surged by an astonishing 28.18%. That massive jump in total income is what pulled the profit after tax up by nearly 35%. So what on earth bridged the gap between 4% operational growth and 28% total income growth?
Well, here's the big reveal. The hidden driver behind all this headline growth was actually a massive jump in other income. In Q1 FY27, other income came in at 262.84 crore rupees. Compare that to the previous quarter, It was a mere 11.55 crore. Now sure, the previous quarter's base was unusually low, but this perfectly illustrates why we always have to look past the PR headlines. Yes, the core business is growing steadily, but that explosive double-digit quarter-on-quarter profit surge, that was largely fueled by this massive other income boost. Also, just for the sake of complete transparency, as we dig through their filings, it's worth noting the company flagged a cybersecurity incident that happened back on May 16, 2026. But they've assured investors that the matter has been reported, an assessment is underway, and absolutely no material impact has hit these Q1 consolidated financials. Good to know.
Finally, Part 5. Looking ahead to the future outlook.
With these strong numbers officially in the books, and keeping in mind they recently paid out a pretty handsome 54 rupee final dividend per share for FY26, what should we be watching next? Well, to gauge if this growth is truly sustainable over the long haul, you really want to keep these key tracking points in mind. You've got to watch overall mutual fund industry AUM growth and their fee income expansion. But honestly, most importantly, keep your eyes glued to retail investor participation trends. While everyday investors maintain their SIP discipline of 4,800 crore a month if the broader equity markets suddenly experience high volatility.
Which brings us to our final thought today. As mutual funds become more deeply penetrated and common across India, competition is only going to get fiercer, right? Ultimately, the biggest question is whether HDFC AMC's heavily equity-focused strategy, a strategy relying a lot on the optimism of the retail investor, will keep them ahead of the pack in the quarters to come. It's a phenomenal start to the financial year, but the real test of a portfolio is how it weathers the inevitable storms. Thanks so much for joining me for this explainer. Keep your eyes on the data, and I'll catch you next time.